PayPal, everybody. Welcome back to my stock channel. This is James, your favorite ticker picker. Happy Sunday. PYPL is the ticker. PayPal Holdings Inc., $66.94 a share. Down today in a down market. 1 month up 12%, 6 months up down 2%, 1 year down 11%, 5 years and then down 19%. Wow, what a disappointment. What's happening over at PayPal? Whoops, they went off a cliff. Looks like the big COVID surge in California finally decided to open at the end of 2021. Took them a real long time. Maybe the internet sales collapsed. I think that happened to a lot of online companies. Probably caused PayPal a big beat. And they lose more money. What happened here in the news? They surged, they plunged 17% at bleak forecast. It stokes growth fears. I would put this in the COVID category. I mean, they were there before COVID. This was a COVID boom. This was a COVID collapse. It's pretty clear to see the dates. The people paying with PayPal was the online shopping rage of COVID, followed by we don't have that anymore. So, is it back to 63? It was at 104 before COVID, 100, 100, 100. I don't know. If it's back to pre-COVID, it shouldn't be at 63. I guess it should be at 100. Let's see how much worse the business got because of COVID. Seems like that boom might have helped them. They generated more cash, and maybe the downfall is what's freaking this people out. This could be an opportunity right here. Whoops. Annual, grow. I like the way that looks. How about you guys? Looks like a growing company to me. 2022, that grew up. We saw that. March is typically one of the smaller months of the year. It is seasonal because it goes with Christmas. The Christmas rage helps PayPal transactions. 7 billion. And this one here was 7.38. So let's just say 7.20 per quarter would be, maybe 29 billion. Maybe the 2023 could land a little higher again. The earnings was struck because it wasn't as good as the 2021, but the earnings is 2.42, 2.46. Yeah, even worse than before COVID on a lot less revenue. So we do have some fundamental things going on here. Let's see what they're doing with their money. Are they spending it on their balance sheet? Are they getting out of debt? Are they increasing assets? Looks like they grew up a bunch of assets in 2020. They went up again in 2021 and even more in 2022. Their debt line also came up 50 to 54 to 58. Their asset line went from 70 to 75 to 78. We got $8 billion growth in assets and a liability growth of $8 billion. So this balance sheet is just a big 3-year wash. I would say their diminishing amount of income is real. It's a real diminishing amount of income. It's not that they earn this much and decided to pay off a bunch of debt or buy a bunch of assets. That's not what happened. This is legit. 2.42. They did do worse than during COVID. They did do almost the same as pre-COVID, but they did it on a lot more revenue, which would confuse me and wonder why that's possible, since the revenue is taxed at a specific rate of the transfer fee, and that's how they make their money, is off of that 2% of each transaction. Revenue 27.52 billion, operating expense 7.6 billion. That can probably use a lot of work. They're still a strong company. They're still probably the favorite payment processor online. I don't know if Cash App took over or some of the other ones, but I think PayPal from Seems like everybody still takes them just because everybody loves them, because everybody still has the demand. I don't see them going anywhere real fast. I've seen them integrated into grocery stores. You can pay for your food at Dollar General using PayPal now. So they're kind of going into a lot of different areas, and I think that's helping the revenue grow up. It seems like they lowered their prices. Maybe the interest rates are hurting their bottom line. Maybe it's their in order to process money, maybe they have to be a banker. Maybe they are a banker because they're doing the PayPal loans, they're doing PayPal credit cards, they're doing PayPal credit lines. Even if you don't have money, you can go buy stuff with PayPal. So it could be that division also. Some things that might be hurting. But overall, I think internet revenue is just going to grow even in a recession, because everyone's going to have to find stuff cheaper. You'll be able to find your mom and pop shops that take PayPal, cheaper again maybe. They don't have an earnings per share. I wonder why. They sure as heck look like they should. Let's see. Well, they had one bad month. They lost $341 million in June of 2022. But they look like they're holding their revenue. Hopefully they're focused on their balance sheet and, or I'm sorry, their operating costs. Hopefully they're getting some work done. Let's check out the cash flow. And they got a nice huge positive one for December, and then a negative one for March. Neutral. I guess just what they're buying and what they're selling depends on the cash flow too. So it's nice to see, but sometimes they're buying stuff. But in this case, they weren't buying stuff, so it's probably bad that they went down from March. They lost net change in cash, down 1.46 billion. They are sitting at $10.66 billion in cash. God, they're rich. Yeah, and they're making money. I don't know. This one looks like a good one. Whoops. Yeah, so what do you make of PayPal? Leave it in your comments below. I want to look at the news. PayPal's savvy move boosts shareholder returns and de-risk the business. Great stocks are still on sale, but sometimes you need to know more. Will PayPal be $1 trillion stock by 2040? A lot of people hyping this thing. KKR to buy up to 44 billion of PayPal's buy now, pay later loans in Europe. I don't know. This is a staple of American society. They've chosen to stay out of politics. They've chosen to do the right thing. They have a good company. I've been using PayPal for 20 years. It is by far my most trusted method of payment. I have a dispute system I can do if I don't get my stuff. I get my money back. Seems like just a wonderful checkout. It's integrated into every shopping cart on the planet. I think it's here to stay. I don't think it's going anywhere. And Cash App has shown its flaws. Zelle has shown its flaws. And I think they've successfully fended off a lot of the competition that they have. And they're well below pre-COVID levels, and they're probably still dealing with some COVID shock. They probably really thought their business would stay high for a little bit longer. Maybe they didn't assess that as a boom enough because they went out and bought a bunch of assets, it looks like. Let's see what they did during COVID. I hate to see them beefing up like this during COVID, as if something's going to last. And that's the problem, is they beefed up thinking it was going to go on forever. And the beefing up, it did beef up the revenue, but it wasn't a good beefing. Whatever they did didn't work out as well as they thought it would be. And instead of this big beefing followed by a big, instead of this beefing of assets followed by a big spike in revenue, which they got, it didn't come with a big spike in earnings, which they didn't get. So those purchases that they made in 2021 to make it bigger, it did make it bigger, but it also didn't increase the profit, probably as intended. But they might still be sorting through a lot of that. This could be a future play. We need to find out more what they bought. Need to find out more what they did. We'll do another video on PayPal, but I really like it. I really like the fact that company, let me see how many shares they have before I stick my foot in my mouth. 2.4 billion in net income in 2022. Let's see how many earnings per share they have. I'm going to put this into some kind of perspective. 1.13 billion. So that's a lot of shares, but their income statement says that they brought in 2.42 billion, which is double that in 1 quarter. That's $2 a share material, even though it doesn't even have an EPS. No, it should. And it probably should be over $2 a share or $1 a share. To think this stock is trading at 66 bucks right now is like insanity. Yeah, this is not what a $2 a share company for a quarter looks like. These people could blow up and do $8 per share per year. This could be a $300, $400, $500 stock, and probably should be. 66 is way too low for that level of earnings per share if it can be sustained. And clearly they had some issue with their new purchases, but it's still holding together. I guess it depends on what the future holds with that line. Investigate what they bought a little bit more. We'll do a future video. I'll tell you what they bought. Subscribe to the channel so you'll find out. And we'll find out if it was a good play that they're just having to finish paying off or something right now. Maybe that's what it is. Maybe they have to finish off paying that asset addition. And maybe that's part of it. And maybe once that is paid off, then the true profit can come in. Maybe we're just looking at round 1 of it. So a good chance of that. But hopefully it did something smart. We'll find out in the next video. But yeah, put this one on the it looks really cheap alert. Thank you very much for watching. Have a wonderful day. Like and subscribe my channel. I really appreciate it. Thank you. Have a great Sunday.